sales of apartment buildings broke records during the pandemic when rents soared to record levels. Prices of apartment buildings rose even more rapidly as investors bet that rents would continue to rise in the future. So the prices of apartment buildings went up higher just because they were betting that the rents were going to go up higher. Talk about speculation. According to CBRE Group, the annual volume of rental apartment purchases has nearly doubled between 2019 and 2021. In the first quarter of 22, investors spent 63 billion on apartment buildings, the highest figure on record. Two things that happened recently that make finding future profits more challenging. Investors have started buying apartment buildings at prices that have risen so fast that their rate of return is decreasing. So prices paid for apartment buildings during the first quarter of this year increased by 22.4%.
Wait, say that again? Prices increased by what?
Prices paid for apartment buildings during the first quarter of this year increased by 22.4%.
That's in a quarter. That's not in a
one
year.
Quarter. Yes, during the same quarter of last year. So negative leverage is what they're starting to, what they call this.
The cool term.
So
negative leverage.
Not cool to have as part of your investment strategy, but yeah. So negative leverage. Interest rates then rose sharply. Multifamily initial returns rates have fallen a percentage point or more from their interest rate on their mortgages. So you have interest rates rising, and their mortgage has gone up, a percentage point. So that's ridiculous. Well, because that's a ridiculous change. Ridiculous. Go ahead.
Okay.
That word.
It's something I just thought of where we always talk about, like, what's the difference between multifamily and single family. It's a discussion we've been had recently when we're looking to get into multifamily and do different things. I would say that it's very hard to compare single family to multifamily because there's two different loan products and two different buyers. Multifamily, it's investors selling to investors. You don't have a single family mom and dad with two kids trying to buy an apartment complex for their long-term house. They also get completely separate loan products to where it's very hard for us as single family residential investors to compete with a multifamily when you have different buyers on each side, meaning I have to compete with returns against multifamily when their only buyer is other investors. On our side, and the loan product they can get on that side, they're getting commercial loans with a whole different level of speculation. They're usually 25-year fixed, 20-year fixed with a 5-year balloon and a whole different slew of stuff. On our side, single family, we have to compete with buyers that can get a 30-year fixed rate loan. It's unheard of in the commercial space.
Now up to 40 years.
And now up to 40 years and stuff like that. We have a buyer on our side that we have to compete with on the purchasing price that drive our returns down because it drives the housing prices up because of the type of payments they can pay to get houses. But now the caveat to that is when interest rates spike, prices go up so damn much. That brings down the price of multifamily, and we on the single family side still have this buyer over here that can pay a higher price because they have a completely different purpose and loan product they can get for that house. Meaning that single family residential, in my mind, can be a little more stable than what multifamily does.
Oh, yeah.
Because we have a different buyer in our market that can access a completely different loan product for a complete different reason for purchasing. Where a mom and pop isn't buying a house to live in their entire year, or multifamily live in their house for entire year or years, their life. We do on our single family side. So it's a very interesting dynamic I just thought of when you started reading that. I'm like, that's actually the advantage of single family we've been talking about for years of like, we have way more liquidity in our market to sell if interest rates spike because people still need a place to live.
Right. And this is not to say like always don't get into multifamily. This is just to say understand what you're getting into before you get into it. Don't get into it like freaking Bitcoin just because everybody's saying it's the next hot thing if you don't understand why you should be owning that or why you should be investing in it. So it goes on to say that, because of these higher interest rates, this means that landlords make less money on their buildings than their banks. So their banks are making more money than the people that own the building, even though the people that own the
Yeah,
building
with
are
insurance at
taking
five
more
and a half,
risk.
but your cap is 5. It's like,
Yeah.
yeah, they're making
So
more money.
So this has not been widespread since the subprime crisis, when defaults on apartment building loans increased. Investors haven't learned their lesson from the years before 2008, when buyers overpaid for buildings and suffered when financial
Yeah,
markets
I
crashed.
disagree with that right
But
there. It's like I think the investors that lived through that learned their lesson. The problem is you have this slew of new people getting into this that didn't experience that. They're only
right.
chasing the hot topic and the money, not understanding what the past was. And they're so eager just to get that deal, to get that contract, to raise that money. So in my mind, it's like, because they get a massive acquisition fee. It's not like they make money on the backside. It's like, no, they make money up front. They
Yeah.
make money in the middle. They don't make money they do make money in the back end if you get your preferred return, but
Yeah.
you're the investor stuck holding the bag on the backside. But that's where they're just so eager. It's like those people didn't learn their lessons because they don't
Well,
want to learn those lessons because it's bad. It's negative. I don't want to see that.
after I finish this little section of the article, I'll tell you a little story that of somebody that just got into some into an interesting investment. So many apartment investors believe they will survive a period of diminishing returns because they expect rents to rise at a faster rate, boosting their returns over time. So, talk about being optimistic. Given that many tenants have already been pinched, the average rent for any rental unit rose nearly 17% from a prior year. And we know it's been a lot higher depending on which area you're living in. So even a minor crisis wave could have far-reaching consequences for the financial sector, as there is no huge amount of money tied up in the rental apartment sector. According to the Mortgage Bankers Association, outstanding mortgage loans backed by multifamily buildings have more than doubled to 1.8 trillion since the financial crisis. Typically, you want the cap rate to be higher. This is what's funny. You want the cap rate to be higher than your mortgage rate, but there has been a steady decline in these profitable rates since 2015. So not since right now the pandemic, since 2015 there's been a decline. Now, most are buying at 3.5% cap rate with mortgages at over 4.5%. So that was that what was that term again? Negative leverage, right? So
That's what there's negative leverage is. It's like, oh, I get 3.5, but I'm paying the bank 5.5.
and their solution is, let's raise rents even higher to increase their cap. But how can they, when rents have already gone up so drastically? So you're looking at that, and it's what we were talking about. Like, this is what we consider to be gambling in the market, right? You are buying an investment that doesn't make sense because the numbers are tight, but you're saying no, 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 it's okay, because we're actually just gonna, the way the market is going, we're gonna just keep jacking up rents, and eventually this will make sense. So here's the issue that I see. If you are one of these massive hedge funds or these banks that are buying these apartment buildings and all that, you can afford to take that loss temporarily. You can afford it, right?
Because they're much longer term. It's like, I have a 20-year time horizon.
Exactly. Exactly. So you can afford to do that. The issue is that the majority of the investors that we know, they're not major hedge funds. They're not big investors. They're local. They're small. They're grouping together a few attorneys or accountants or whoever have high incomes, and they're pulling them through syndications and
Syndications.
everything to get into this, hoping that they're going to do this. And there's an investor I actually ran into recently, and we were just talking about multifamily. We were talking about all this, and he's like, "Yeah, I've been curious about multifamily, so I actually invested in a syndication deal." And I was like, "Oh, how's it going?" He's like, not that good." He's like, "We're not even getting our preferred return right now." He's like, they still have a lot of vacancy. They haven't been able to rent it out as they thought they would at the prices they thought they would." And I was like, "Damn." I was like, "That's in this market. Like, we put a property out for rent, it rents in less than a week."
Mhm.
So they are that. All that tells me is that you're severely overpricing those rents or to not be able to rent them. Or you're not. Well, we know a few investors that do multifamily, and they tell us that they're like, "Oh no, you don't need to do that much. You just clean it up, maybe put some carpeting, and you put it back on the market for like $300 more because of this." And I'm like, those are bad habits you're getting into
Yeah.
because you're not putting out a good product. You're just thinking just because people need a place to live, they'll rent anything. And it's gonna get to a point where people are like, no, that's a little too
Also,
much.
they're doing it because they can. It's like
Mhm.
what's going to increase with that is the amount of evictions that come out of that. Because like we've experienced it. Like I just rented one of our properties, and the amount of people that were going for these rents, where on paper it's like, hey, you make the 3 times gross income and stuff like that. Okay, good deal. Let's go through, go through the application process, show the house. Like I try to vet them as much as possible, so I don't have to drive out to these houses as much. Get out there. All right, we're good to go. Do you like the house? Yes. Okay, here. And I send the email and I tell them up front, here's all the stuff you need to pay. And like, okay, yeah. And then not but twice on the same house, somebody got a hold of me and were like, hey, so can we make the security deposit and the rent and stuff over time? No. And then I told them like, hey, here's the pet fee, here's the security deposit, and this is a prorated rent for May. And it's like, and that get our next payment's due in July, right? No, your next payment is due in June. Like you got to pay me up front for my security deposit, and you got to pay me for the month you're going to rent it in May, and then June you got to pay me for June. Like,
You're so greedy. You want to get paid every month.
but it's like, and like, oh well, I can't afford that. It's like, oh my goodness, where everyone's like, they are paycheck to pay. They're one crisis away from not being able to afford the house. You do that in apartment buildings and you're trying to jack these rents up and you're like, just get somebody in there. Just get somebody in there. Well, foreclose, like evictions cost you a hell of a lot more than just having somebody like spending the time and waiting to get somebody in there.
Yeah.
Because now you got 2-3 months of sitting there that a rent that you can't even drop the rent to get somebody in there. Like they're out. And it's like, and that's something that worries me when you have price increase like that, you're going to have evictions rise. When evictions rise, people start crying and freaking out because they have nowhere affordable. And it does suck. And then who gets involved? Politicians.
Yep.
Politicians get in there and they have a problem because their voter bases, they're catering to what the voters are saying. And they start creating policies like, well, now that's what happened in California. If you look at it from the 80s, 90s, and 2000s, like prices rose so damn fast last 30 years that all these policies came in. Whereas like the fastest price increases that also had the highest eviction cases that have some of the most like predatory laws written towards landlords, your coastal, like you have your New Yorks, your Washingtons, your Seattle, or your Washingtons, your Oregons, your Californias, New York, and DC areas. Like,
Yeah.
that's where that stuff, because prices went up so fast that it's the story being played all over again.
Yep.
That's what worries me.
Well, so here's the advice. Take it for what it is. Is if you are looking to get into the way that if you're looking to invest into multifamily through syndication, what you need to do is what you need to keep in mind is you need to find good operators first. And good operators are not operators that started a year or two ago and they have 1 or 2 apartment buildings under their belt. You want to find somebody that's been doing this for more than just the pandemic era, right? Prior to the pandemic. You want somebody that's been doing this for 5 to 10 years that have done, over 10 apartment buildings successfully syndicated, operated. They have the experience.
Or understand your risk that you're taking and demand a bigger piece of the pie.
Yeah. Well, good luck with that. Because the
Yeah.
reason I'm saying good luck with that is that it's not hard to find stupid money right now.
Exactly. That's
So you're if you do that, you're gonna lose out every single time, right? Because there is stupid money out there. But that's the point. It's okay for you to lose out because you're not going after a stupid investment,
Yeah.
right? I'd rather you chase a smart investment, find a good operator that has the experience, and then invest with that person, right? You're gonna increase your odds of actually making money on these deals because, like this guy was telling me, he says, "Look, the monthlies are fine, and like the monthly cash flow and the draws they get, he's like they're fine. But the reason we invest in multifamily is we want that 2-3x of our money when that property sells." Right, so they're looking for that value appreciation, the rent growth, so the values go up and all of that. They're looking for that, and if you can't provide that because you overpaid for a property, and your only hope is that you're going to be able to jack up rents astronomically just for the value of this property to go up. Like, I'm not saying you can't do that. I'm just saying that you don't know
Yeah.
if you can or can't, and that to me is insane.
Yeah.
It's just
I
crazy.
mean, it's gambling.
Yeah. So that's our little rant on multifamily. So I hope that helps you guys out. And if you have any questions and everything, like always, comment below. Make sure you subscribe. That way you're not missing any of these lives where we're covering all the strategies and things that we're doing. And even then, that it just reminded me, like, we're looking to get into multifamily ourselves. But what are we doing? We're cautious as hell. We're coming in. We're analyzing deals. We're analyzing properties. We're looking at things. We're getting educated. We're talking to people that have been doing this for years,
Yeah.
not that just started a few months ago and they picked up a property and now all of a sudden they feel like they're
Well, that's what it's like.
multifamily coaches.
Everyone on the topic of inflation and things like that, we can switch a little bit.
Mhm.
Everyone's like, oh, but I got to do something with my money because inflation's beating it to death. And that pushes people into speculative investments. It says, well, I got all this money. I need to do something with it. I need to do something. I just can't have it cash sitting still like it's getting beat to death by inflation. It's like, but being patient and cautious is still a good thing. And having the mental fortitude to be like, look, yes, inflation is high, but I'd rather wait and have my money be depleted by, say, 2 years of inflation, say it's 10, 20%. To call it 20%, terrible. But I'd rather still have that money than put it into something that says, I'm going to get these returns and I'm going to put it to work, but it doesn't work. And you don't get that money. And now your money's stuck in that investment. So say this market changes and it does drop or does get much more difficult and good deals start becoming available, but you can't get your money out. And when they do eventually sell that property, you only get $20,000 back versus the $40,000 you put into the deal.
Yeah.
So it's like being cautious, patient, and educating yourself in these times is very, very, very important. And I'd say it's even more important than any other time. It's like, just because you have money sitting in your account getting beat up by inflation, earning 0.1% on your bank CDs or whatever it may be, it's like, but yeah, that's still not a bad thing. If you're watching the market to see when is a good opportunity to put something in with a great person that knows how to make you get that return.
Yeah. You still have the capital. Still have the liquidity.
Yep.
Yeah. And that's definitely one of the things that we were talking last night with our friend is that, you know, he's invested. We're kind of looking at his portfolio. Like, he's invested in real estate, has a little bit of Bitcoin, some stocks, retirement. He's like, what do you guys think? I'm like, I think, you know, you're good, you know, a little really heavy on real estate, which is fine.
Because we're in real estate, it's kind of hard when you're in this business to not have heavy real estate.
But one of the things I told him, I was like, try your best to have more liquidity available, because here's what I'm looking at. And this is everything that we're talking about is, you know, our opinion. Okay. So don't take this, you know, seek out your financial advisor, accountant, attorney, whoever it is that you need to talk to. You know, we don't do legal advice or accounting advice. We're not veterinarians. We're just giving you our opinion. And the way that we look at it, the way that we see it is you need that dry powder, because when a recession hits, we believe people are going to panic, people are going to freak out, and you're going to have some amazing opportunities. I think you're going to have people, especially in the commercial real estate space, you're going to have people freaking the hell out and selling for a lot less than what they're in it for, because they're going to be thinking that this market is going to be tanking even further. Because that's usually what drives the market to tank further, is people think it's going to crash. Everybody starts offloading and it crashes even more, right? So it's going to be something that if it goes that direction, having liquidity, you're going to be able to pick up properties and you're going to be able to do deals at massive discounted rates. And if that doesn't happen, you still have the capital that you can just get into the market and invest anyway.
Yeah.
So either way, you're protected. You understand? Like, that's kind of my opinion on it. Like, what do you think?
I mean, I agree 100%. It's like having some liquidity, and it's also like if an investment starts to suck for 2-3 years, and you do lose, say, rents go down or prices go, whatever may happen, and you can have the liquidity to shore that piece up, shore that portfolio up, and not have to sell the thing. It's like selling only makes it worse. That's why you have those booms and busts, because people get too over leveraged and they have to sell for less than what they bought. So having liquidity solves that problem. Having your reserves as a personal investor, be like, hey, I don't want to sell any of my portfolio. I'm going to have some vacancies. I'm going to have some things where my portfolio is going flat or loses money. But I have liquidity and savings to hold that. And withstand the storm or withstand the storm. Yeah. Uh,
Sure.
sure. Yeah, we'll go with that. So,
But I wanted to touch on this article and this is not just one article. This is actually, I've seen it across the board in a few different ways, a few different places talking about it. You have real estate investors have been snatching up homes, preventing everyday buyers from getting a piece of the pie. Lawmakers and HOAs want to stand in their way. So we're starting to see cities and lawmakers and everything coming after investors because they're blaming investors for what's going on in the market at this moment. So the article goes to say whether they're looking for long-term rentals or to make a quick flip, investors like Invitation Homes, the owner of 83,000 properties, and mom and pop operators are making it harder for people to compete when looking to buy in their own neighborhoods. Investors bought 33% of US homes on the market in January alone, the highest percentage in at least a decade. And that's 33% of the US homes on the market. Like, I imagine what it is like people like us that we buy off market deals. Like, I'm sure it's we're snatching up a lot of the inventory. Some of the investors have turned aggressive with their tactics, raising alarms from Newark, New Jersey to Dallas and California state capital. And the way that they've been getting aggressive is it feels like we're being preyed upon, says a homeowner, because they're who's been batting away cold calls from investors urging her to sell her home. So investors are getting aggressive because they're cold calling. They're doing what we do as investors, right? We do marketing to try to get a hold of homeowners who may be interested in selling. In Newark, the mayor said that the city was considering legislation that aimed at preventing steep rent increases and urging the state to come up with a blanket policy to regulate institutional ownership. So and then you have North Carolina, the state that has seen an influx of people from the Northeast. Homeowner groups are taking matters into their own hands. For example, some HOA in North Carolina is taking on investors by proposing amendments to their covenants to insist that the buyer live in the home or leave it vacant for at least 6 months before renting it out. So the HOA is now trying to dictate what you can do with your property. They're coming in and they're basically bullying people out with cash offers, says the president of the HOA. And
bullying people out to take money, like
yeah,
that shut up and take my money thing. Like, I'll give you $300,000 even though it's worth 250. Like, the seller does not, they're not holding a gun to their head and saying, sign the documents. It's like,
yeah,
I just put a stack of cash here. Like, you can take it or not. I'm not forcing you to do it. Like, money talks. That person wanted to sell,
exactly.
obviously. And there's like, you know what? I can take that money and I can do something else with it. I can move. Like,
But it's the terms they use that upsets me, right? Because they always use these terms to paint investors in such a negative light. You know, that it's like they're bullying, they're being aggressive, they're doing all this. We know for a fact, and we have so many testimonials of people that are like, man, it was so great that I was able to work with you guys. You know, because you were able to give me what I needed. I didn't want to go on the market. I didn't want to deal with a retail buyer. I didn't want to deal with agents. We were able to help them out, you know, where other people couldn't have helped them. So we're not predators. We're not stealing homes from people. We're simply giving them an option, letting them know, hey, if you want to sell, we're interested in buying, right? And here's the perks of selling to us. We pay cash. We can close quickly. You know, if you need more time in your home, you can stay in your home. We'll rent it back out to you, or you can stay a few extra weeks so you have time to move. Like, we're very flexible where retail buyers aren't.